Before we start about what we're trying to show you about the Israeli economy, first of all, I would like to thank the Silverstein family and Larry and all the executives for hosting us here. It's not taken for granted, it's quite amazing. And the other thing is to say thank you for Moshe Waba from EY that helped us review the numbers, and also for Amir Agaman from my team, who was not able to come here, but he's done a lot of work here. So before we start with the simulator, I want to talk about, just a minute, about Clal, but other than Clal being one of the biggest institutional investors in Israel, and these days the biggest institutionals in Israel are considering where to basically allocate our investments for other people's money. We manage around $100 billion of funds, and in providence funds, long-term savings on different types of vehicles. And we are basically in need to discuss and decide for ourselves how much to allocate in the Israeli economy and how much to allocate abroad. But before we talk about that, first of all, Clal Insurance today, and Clal Enterprise Holdings, is basically, it has two arms today. We have the insurance business, as I spoke about, the long-term savings, but also Max, which is previously called Leumi Card, one of the biggest credit card companies in Israel. And what I want to show you in this picture, other than the figures of the group, is about resilience of managing a company in Israel these days. And first of all, I'll start with the human factor. We see in this picture Ilan Dalan, one of our employees, whose son is still kidnapped in Gaza. So we have, obviously, we manage around 4,000 employees in Clal, another 1,800 employees at Max, and we have more than 30 families who were personally affected by somebody being murdered or died during the war. So that's one thing. We have more than 300 employees in reserves, male and female. We have children's. Everyone has children. My daughter serves as in the operations one of the special units in the IDF. And when we're talking about resilience, so first of all, obviously, it's the people. And one of the things maybe Israelis know well, but maybe not all of you know well, is how a day like this is in the office these days in Israel. And what's interesting enough is that it could occur that the siren would break out now. We'll all have to go to a safe room, wait 10 minutes to hear the boom of a rocket falling or being intercepted, and then come back and do our business. But even what's more amazing is that everybody's taking his phone, calling his children at home, could be in Jersey and somewhere else, and making sure that everybody went to the safe room. And then 10 minutes later, they can come out and continue our lives. So that, I think, is the civil front is an amazing civil front. But the way to be able to manage an organization in these days is based on investments and experiences that we had many years ago. I don't know if everybody knows, but we started creating these secure rooms in each building that was built since 1991. Since 1991, after the Desert Storm operation, when Iraq fired missiles in Israel, there was passed a law that any new residential building, but also offices building, have to have a safe room. And these safe rooms basically allow us to act these days much better. So that's the infrastructure, the physical infrastructure. In addition, you see a picture of Max at the left side. It's not really clear, but if you'll come closer, you'll see that the missile just landed around in the lobby of the building 3 weeks ago. And half of the windows were shattered by that missile. And by the next morning, any credit card deal by Max was done in an ordinary on the ordinary course of business. And that was because today the location, the physical locations of the business is not that important. We had the corona that taught us everybody how to work from other sides, from home. So the whole organization basically the next day worked from home. And then each day we brought more and more people into the office, and we're able to basically do all the operations of this obviously high high-tech and highly sensitive business of credit cards and settlement of transactions with seamless effect on the end users. So these are our day-to-day management under these circumstances, and I think it's quite amazing. And it's based on both a lot of, in order to be able to manage a crisis, you have to invest a lot in preparing to it. And I think that both the people, but also the organizations, are well prepared to deal with a lot of things that makes us much more resilient these days. If we move to the motivation of creating this simulator. So first of all, it's interesting enough, we started this, this presentation or this drill around half a year ago. In the middle of 2024, we were in the middle of discussing about our allocations, how much to invest in Israel, how much to invest abroad. Everybody sees the S&P doing so well, so why not just invest in S&P? And we're responsible to do the best figures for our clients as well. And I found it very difficult to have a discussion with so many people having their very, very sensitive situation. As we said, we see people losing their families, we see people struggling when their businesses are in a bad situation, and we wanted to create, first of all, an analytical work that will allow us to predict how to make decisions in this uncertainty. But the other thing is, and this is important, we decided to do a simulator and not a model, because when you create a model, you can argue all day long about a certain figure. But when you create a simulator, we'll discuss that in a moment, you can basically change the key parameters yourself and see how it affects the economy. And we didn't know that we will do this simulator next to the amazing F-16 simulators we have here, but it's interesting enough that we both find this much more effective than just trying to predict a certain scenario. Okay, so about the methodology of the work, first of all, it must be said that it's a bottom-up work. We took all the budget lines and that were actual expenditures of the government between 2017 and 2023, and we put it into the numbers, so we see the past quite clearly, but we also try to predict how these lines of budget will act going forward. So most of them go forward according to the growth in GDP, and the others according to differences in actually what happened. So when we did that, we were able to create quite a well model of how things would be predicted going forward. And as I said, this is a simulator, another model. Then we have some global comparison, because when you're investing from abroad, and if you're seated here in the United States, you have to decide, well, okay, I'm deciding not to invest in the United States, but should I invest in Israel compared to other jurisdictions? So we have some global comparison and validation. It was very important for us not to be right, but to be with an open architecture. We made a lot of meetings with financial head of the markets in Israel and abroad, from the private and the public sector, in order to validate the numbers. And I must tell you that there is no dispute about the underlying numbers. And in order to give basically a way to understand the simulator, we have created two main scenarios. One central scenario, it was basically based on the expectations of the Ministry of Finance, with some adjustments we've made with regard to the defense expenditure, which is quite a crucial factor moving forward. And eventually, this is basically the scenario that we're seeing happening right now. We didn't call it a ceasefire, but we meant that the war, as we saw it, would come to an end by the mid of 2025. It will be reduced the fighting by the end of 2024, and by the end of 2025, it be reduced a lot. And another scenario, which is quite an extreme scenario, for a prolonged war for 3 years. And we talked about the validation. What's interesting about, obviously, when you have a central scenario, is to see that there's opportunities but risks. When we started this drill, it was in the mid of 2024, and it was before basically the IDF entered into Lebanon, and before Iran has attacked Israel the first time and then the second time. And one of the interesting things is, obviously we can discuss on the opportunities, many things that could happen in the world, but also in the risks. But the escalation of fighting, what originally was considered to be a very big risk for the Israeli economy because of the expenditure rising, was basically, the risk has realized much less severe than expected, and to some extent, many see this as opportunities today. What we see happening in Lebanon, even in Syria, we see the Abraham agreements are still able to be enforced. So basically, this is obviously a risk that is realized much less frightening than expected. And if you look at the scenarios, I will try to walk you through the main issues where you can see it. I think the 4 lines that here, first of all, this is the nominal GDP of Israel. And as we said, 2023 is the actual. The expectations of 2024, we are in the beginning of December, so we have good view of how the expectations of 2024 will be. And then basically, what you see the GDP is basically according to the growth of nominal growth you see here, the expectations of inflation through the market, and what is the real growth that is expected. And according to this basic scenario, first of all, it must be said that in the long run, in the last 20 years, the Israeli economy was able to grow by 5.8% nominal. So this is already a bit less growth than in the past, due to the circumstances, but also due to demographics, of the bigger percentage of maybe religious people working less than secular people. So it's already embedded in the numbers. I will come back to that in my last slide. But as you can see here, then you can see the real growth. And what is expected in 2026 is, should the war end as we see it by mid-2025, then we suffered 1 year, 24, of almost no real growth, only 2.5% growth in 25, and then a rebound in 2026, which is basically much less than the rebound that we saw after the corona. So this is an expected rebound, and then you go back to the growth, as we said, for the long term. If we're talking about the defense spending, then the numbers here are based on the INSS, which has done extreme work in trying to predict the expenditure of the Israeli defense, and it's including the Ministry of National Security. So what you can see that in 2023, we were about 120 billion shekels per year, but we're reaching almost 50% more, about 180 billion shekels. So even with these numbers, we can see that the debt to GDP ratio of Israel is beginning by around 65%, but it reaches only 67.1%, which is amazing figures relatively to the world. And if we go forward, as I said, I'm just trying to focus you on these 4 lines, because when we move now to the, first of all, sorry, before we move on to the extreme scenario, just to give you a hint of what it means, 67.4, this is the Israeli line, which is the maximum government to debt scenario in this scenario, and you can see that we're well in positioned compared to the world, even given the severe situation that we're in. If we go to a negative scenario, prolonged war of 3 years, okay, this is obviously even now considered to be a very extreme scenario. You can see that basically the growth, the nominal growth, you see the rebound coming only in 2027, and in the long term we come back to 5.4, but we're missing almost 3 years of growth in the economy, which is quite a severe situation. And then you see the expenditure of the spending on defense increases for the next 3 years, and only then comes back to the around 180 billion shekels, which is again still for the long term 50% more than where we started. And then you can see that the debt to GDP brings us to 75%, and what we can see here, that still even this 75% is well positioned compared to other countries in the world. And this is based on a trading economics website that tries to predict the GDP of main economies in the world. I must tell you that their numbers here are even, should be much increased by the figures, because the numbers that were here were predicted in 2023, and the beginning of 2024, we can see all over the world that everybody will increase their expenditures much higher than expected here. We can see many countries investing much more in defense, not only Israel. You can see Japan, Germany, Poland, even now South Korea, whoever looked at what happened today in South Korea. So all the world is going to invest much more in defense and also in social welfare. If we're talking about France and the diplomatic situation around the welfare, and so obviously I think they're underestimating the expenditure all over the world due to recent developments. So if we're talking about the simulator, just to show you an example, could you switch? אני לא יכול מפה. Let's see. Okay. That's fine. So what's interesting about what we did here is that instead of arguing, as I said, about the figures, first of all, you can see that this is on a Power BI, so you can have the long war scenario and the adjusted and the center scenario. And if you change between them, everything is changed accordingly. If you look to the government debt to GDP, here you see in this scenario it's only 67.5, and if you go to the long war scenario, it goes all the way up to 74.9. And here you see the projections of the Bank of Israel baseline, which is interesting enough aligned with our basic scenario. And here you have all the data of the spending of the government of Israel based on each and every item. And instead of arguing with the numbers, you can play with them as well. And what's interesting, for example, if you go back to the main scenario, and you don't believe that we will be able to grow as much as you think, and you think that the growth would be 1% lower in each of the next years, so you can basically change the growth in each one of these years and see what happens, okay? So, and what's interesting, if we go to, I will clear it up for a second, because I want to give you something. If you go basically and you change all these KPIs, you can see a sensitivity between the growth of 25, 27 and the interest rates of the debt of the governmental bonds. Because basically, instead of arguing what would be the rate of the governmental bonds, it could be because the rates are going down in the world. It could be that there is a mistrust in the Israeli market, so the rates are going a bit higher. Eventually, you can decide whether or not the interest rates would be 1% higher and growth will be 2% less for the next every and each year between 25 and 27. And you can see still that if 67.4 is the center of this sensitivity, then obviously there are good scenarios and bad scenarios, but all of these scenarios are quite stable compared to other jurisdictions in the world. And you have to remember that the Minister of the Bank of Israel still holds more than $220 billion of reserves for that is never have we had so many reserves in the Israeli economy. So basically what you can see here, and again, you have here the permanent expenditure of defense. You believe it will be 10 billion shekels more every year. You can play with this, and eventually what you see is the strength of the economy. So if we go back, so now you understand that's the model, and at the end of this presentation, you'll have a barcode. You can go into the link, and you can play. This is a new way for you to play with the Israeli economy and put your own numbers into the scenarios and see how stable the numbers are. And if we're going back to the presentation, basically I want to give you a few insights about what we just saw. So first of all, we saw that without security, there's no economy. I mean, obviously we need to have security in order to be able to work in Israel and to support the economy. but yet a strong economy is required to be able to support the expected increase in defense expenditure. So obviously we need to grow because we need to have a bigger pie in order to feed everybody with their needs, but also to be able to support the requirements of the defense expenditure. In addition, this is something I spoke to the Israeli government officials when I met them, try to be working with Tai Chi and not boxing. We have been spending too much energy about boxing with each other, boxing with investors, maybe with credit rating agencies. We need to be able to speak in a much more transparent way and integral discussions to make them, put them in the model and try to solve them. And that's why we decided to build this as an open architecture where everybody can put their input and put aside the arguments on the facts and discuss how we help the facts actually happen. And so basically, the starting point of the Israeli economy is very strong and powerful compared to the world and compared to itself. And growth-supporting investments are pivotal for Israel and any economy. Both real and educational infrastructures are required. Additional burden should be distributed more equitably. That's to minimize the impact on the economy and in order to preserve the social unity in Israel. We've seen, obviously, when things become more stressful, that everybody is looking to see that everybody is supporting the future of the country. But if we adhere to these objectives, I think that the economy is expected to remain robust in the foreseeable future, and it will be capable to financing the cost of the war, even if there is an increase in 50% of the permanent expenditure for defense. And emphasizing the commitment of these objectives, the growth and the connection between economy and the defense is important for the future of the country. And I think that in many ways, we must use this opportunity of the terrible things that happen in Israel in order to secure its future. And we're actually doing this right now when we're meeting here and investing more and more money in the future of Israel. This is an interesting graph, only one graph I asked for. And this is the equity returns from the beginning of 2024 up to date. So obviously you see the S&P, the blue line, who's doing remarkably, and that's interesting. But we're, as I said, we're now discussing, well, if I'm trying to diversify my investments from the United States, and I'm thinking whether or not to invest in Israel, and you're looking, comparing Tel Aviv, stock exchange 100 to 25 index, compared to the MSCI World, excluding United States, you see that after we've secured the situation and turned the war around a bit, Tel Aviv is doing much better than the rest of the world. So this is back to the point when to invest in Israel. I do believe that at this time, given the situation, Tel Aviv is an opportunity compared to almost any other jurisdiction in the world. And with regard to Clal, 1 minute. With regard to Clal, we try to practice what we preach for, and we've done substantial investments in startups in the Israeli economy, Israeli-related startups as well. We usually come in not in the beginning, not in the early stages, but a bit later, helping you in the last mile towards maybe going public, and we're committed to that. We've started it around 2018 up to date, and we do believe that at this time, the pricing is better. So we will continue doing that. And I promised you a note about, there's a lot of discussions when Tal Carrot asked a poll of hands about who's Jewish and who's Israeli and who's not. I won't do a poll of hands, but I believe that if we look about every one of us, and I'm secular, but if you look 3 or 4 generations behind, all of us were religious. And I'm saying that because, first of all, this is my family. I'm 9th generation already from Hebron and Tzfat. And you see these people were religious. They had to run from Hebron because of the riots then. And then they had an earthquake in Tzfat. And then some of them moved even to the United States and came back to Israel in 1934. And I think that when we're talking about the future, first of all, I think that the religious people in Israel could be part of the solution. and the demographic solution, the demographic growth, and we need to work in that area. But I think that if we're thinking about our, our challenges, think about the people who really came here in the beginning of the country. And I think that it's important for us to honor them as well. And we're living in Israel as from a decision. We could have lived anywhere in the world, but I choose to raise my children in Israel because I believe in that that's the best place for an Israeli and a Jew to grow in. And with your support, I think we'll make it a better place. So thank you very much, and have a good day.